Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, December the 15th, the year 2017, the weekly wrap-up and waiting. Trading, most of the time when you're trading, you're spent waiting. You spend it waiting. It only takes one mouse click to enter a trade and one mouse click to exit. That doesn't take too long. So in between, it's all waiting. I've done videos on that before, but I'm just going to keep cycling through the basics because that's all we need. And once again, those who like to ask about stop losses, it's a function of risk and position size. Risk is the amount of money or the percent you're willing to lose on a trade. When you enter the trade, you don't know if it's a winner or loser, so you can control how much you lose. So this is where you need to focus your risk management, trade management, money management on, is how much you're willing to lose, and make sure you do not lose more than that on any one trade. So we'll take a look at the weekly dashboard here, or the dashboard I have set up for the week. And as we can see, the AUDJPY did not fill, but everybody else filled this week. Week's not over, but I don't see it filling. I just don't. But you never know. Anything's possible. And you can see here, this week, we went through the upper wick zone of the previous week's candle, and then we came back into it and we came out of it. So weekly wick zone trades, there they were right there. They were winners. So if you didn't do the wick zone, but you came back across the weekly open, and we can switch this over to the day period. You can see right here, there's a win. Okay, daily right here. So we've got Friday, Thursday, Wednesday, Tuesday, Monday. So you can see how many opportunities you had to trade the weekly open on dollar Canadian. That was the pair of the week. I'm picking a different pair every week for those of you just tuning in, just to show that these methods work on the pairs. Any pair, doesn't matter. We're not cherry picking. Now, of course, some methods work better, or some pairs work better with certain methods than others, but we want to fit the tool to the job. But in this case, you can use these with all pairs. And let's put this back to the weekly. Let's look at the daily chart. As you can see here, we've got dollar Canadian entering into the upper wick zone. You can see here, this is yesterday's candle. You can see here it entered the wick zone, came back out as usual. And you can see here, close to open, how far price has moved away from the daily open, how far prices retreated from the daily high and reversed off the daily low. That's what these columns are. High minus the close, close minus the low. Once again, daily ranges. And we can see here, euro is still, it's just lagging along. The yen, dollar Canadian's got a nice range this week. High minus open, open minus low. These are if you're taking an open cross. This is the potential, how much you could have made trading the simple open cross. Daily open, using the daily candle. Whatever your broker is, wherever their daily candle is, that's what you do. Some people ask, well, what time should I set it to? It's irrelevant. Doesn't matter. Don't worry about it. Use whatever your broker's time whenever they set the daily open. Price is still going to move away from it. It just has to. Once again, buy zone. You can see here, if you entered there, you stopped out, reversed, should have made it back. Another opportunity to go short. taking it there. Another opportunity. Let's see. Actually, yeah, we started here, went down, came back up through opportunity for a long. If you took this long, you'd be up 11 pips. Not bad. And the rat zone, you can see here, we came down, put in a daily low, reversed off the low. Once again, rat reversal. Red candle closes. Green candle closes. You enter at the high of the green candle, and the rest is history. This zone, last place to get in. If you don't get in here, you get in out here, the ship has sailed, and you can see what's happening. So right here, one thing, talk about waiting. The thing about waiting is we're usually looking for entries and we're looking for exits, okay? But what we really should also do is look for a reason to wait. So for example here, you can see that you've got a green candle closing, a big green candle, and you've got a red candle closing. And then if you would have gone here short, you'd be probably stopped out. You would have taken some heat. So you wonder, well, how do I know if I should take that trade? Well, what you can do is, it's real simple. We're looking at the M15 here. Well, if you think you're going, okay, I see an opportunity. Well, what if I were to shift over to M30? Is that opportunity still there? Or if I'm looking at the same data differently, oh, if you look here, it's like, well, wait a minute. I don't see an opportunity now. I wouldn't take that trade. So sometimes if you move up a time frame or two, so for example, here we switch over to H1, but it looks the same because we're, as you can see, we're still in the first half hour. So it looks like, so, but once again, you'd be trying to go long on a green candle. What's the rule of thumb that I put out there back around, what, 2008 or something? The rule of thumb is you don't trade against the H1 candle color. That's the whole reason why I came up with the candle color multimeter. One of the first multimeters I think I put out there. It's real simple, real basic. This is a more fancy version. It tells you, you know, how many candles in a row are a certain color. So you see here we've got 5 H1s in a row. 1, 2, 3, 4, 5 green H1s in a row on that multimeter. And so, once again, look for a reason to wait as well as looking for reasons to enter and exit. So that's the main point I want to get across today, is put waiting on that checklist. If anything, it should be the first thing that you look for. Should I be waiting? And it's just like, well, you know, maybe, maybe not. Or if you say, well, should I enter? Okay, well, should I wait? And see if there's any conflicts. Now, of course, you could talk yourself out of trades if you take it to the extreme. You could probably, you know, you could go all the way up to the monthly candle and go, no, I should wait. No, like I say, usually 1, maybe 2 time frames. With that being said, on the H4, what you want to look out for is what I call steamrollers or freight trains. See these big H4 candles? They're usually indicating that's a freight train. Yeah, we had some news this week, but you usually, if you see one, it's usually followed by another. So not all the times, but usually. So here you had a big red, but it came down. I believe that was a news event this week. What was it? The FOMC a few days ago. Or maybe it wasn't the FOMC. But like I said, remember, nothing is 100% in trading because anything can happen. So why I pointed that out, you can see here we had this big green candle that basically wiped out that big red one, okay? And so rather than look for a short, you'd be looking to go long, okay? Red, green, price action. So that's one of the things you want to be careful when you're doing these daily reversals. okay, is that you don't want to get caught in front of a steamroller or a freight train, because it will flatten your account. Let's put this back to M15 and let's move on down the charts here. And once again, the pivots. You can see here on the daily pivot right here, that purple line, we came down to, it looks like, let's see, what is that? I have to bring up the, okay, we came down to the midpoint here, the monthly S1 rather, yesterday, and then it revisited today. It tested and it came back to the pivot. So this is what's considered fading the pivot. Okay, this is what the longer term traders are looking at, the monthly pivots and the weekly pivots. So you see, we didn't quite get to the weekly S1. We did get to the monthly S1, and we faded back to the weekly pivot and heading towards the monthly pivot. So that's for you pivot point traders. Once again, the missed pivots, as you can see, we're just taking out. We still have that, and this pivot right here, that was a missed pivot, got taken out yesterday. So you see there's no line there. So you have to go all the way back to 1023. And you can look at the analyzing. If it opens greater than the pivot, 75% of the time it's going to take out that pivot below. And if it opened above, 76% of the time. So that's 3 out of 4. I mean, and the thing is, even if it doesn't hit the pivot, most likely it moved towards it. There's some exceptions. It really didn't move towards this one, but here it did. Here it did. Here it did. There it did. So you can see even the ones that don't quite hit it, if you fade that pivot, you will have an opportunity to take some pips and put them in your account. Once again, simple. Yesterday's high, open, close, midpoint, low point, simple horizontal line trade. You just trade with the candle color at the horizontal line. It's that simple. So in this case, as price was going down on the H1, it was still green, so you probably would not have taken that trade. But you could have taken a wick zone trade right here, because price came back into that wick zone of the previous H1 and came down through. And it's right there. As it's exiting, it's turning red, and this was probably a holo trade, the highest open trade. I don't think I have a holo screen up here. I might have to put that up. Missing that one out. Once again, looking at the wick zone, and here you go. It entered and exited. It entered and exited. That's what we're looking for with the wick zone. And simple price action, you see here we got a 3 ball on the top, green candle closes, red candle starts. This price action motion here, it broke that low, you go short and you put pips in your pocket. And once again, I'm using a turn trade and my new price action indicator multimeter here. This is the higher high, lower low, higher low, lower high, and you can see right here the meter's lining up red. So, but you missed your best opportunity here. Taking simple horizontal line short here, you could have pocketed 10 pips. So, fellow traders, that's the weekly wrap up. Remember to wait. Look for reasons to wait. And as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to enjoy the weekend.